Speaking of TCS, Reema, the big block deal that took place today, finally, what is happening here now?
Well, so first the news, 2.2 crore shares have changed hands. It's happened at an average price of 4,043, which means the deal value is approximately 8,900 crore. And the deal has been struck at a 2.5% discount to yesterday's closing price of 4,152. The total size is about 0.6%, and Tata Sons, we understand, is the seller. Now, Tata Sons, that's the promoter of TCS. They held about a 72.4% stake, and from that, they've paired about 0.6%. But now the spotlight also goes on to the rest of the Tata Group stocks, where Tata Sons actually holds a sizable stake, a 42 to 45% stake in Tata Power, Motors and Tata Elxsi, and about a 30 to 32% holding in Trent, Tata Steel and Tata Chemicals. If you remember, as CNBC-TV18 has been pointing out that Tata Sons IPO is not happening, but Tata Sons needs to bring down the debt on its books, which is in excess of 20,000 crore rupees, and therefore, monetizing their stake in their subsidiaries, in their holding companies, is perhaps one of the ways. They've done that today with TCS. They've raised close to about 9,000 crore rupees, but is there going to be a bit more? TCS was down 1.6, 1.7% yesterday, and it's followed it up with another 3% knock, and it's also dragged the rest of the IT stocks lower with itself. So you are seeing weakness even in Wipro, Infosys, all these stocks are under pressure.
IT has been inherently under pressure, right?
That's because we have the Q4 earnings will start, right? Around 12th, 11th of April is typically when IT companies start reporting numbers. And all the commentary seems to suggest that there is no uptick in demand as of now. Everyone's waiting for that, tap to get turned on in terms of a demand uptick. But right now, there are no signs that it's going to happen, which basically means that when Infy and HCL Tech come out with their annual guidance, it's likely to be laced with caution, and it could be a tepid number, not a number that the market is hopeful for. Maybe things turn around through the course of the year, but at least as of now, there hasn't been any pickup in demand.
Managements have also been saying, right? Earlier, there was the consensus that FY24 will be a washout, then FY25 will be better. Now, FY25 is also on a sticky wicket, so it doesn't look good as of now for IT. There you can see that TCS at the lowest point of the day, 3.2% lower, almost nearing the 4,000 mark, and the IT index itself